I mean, we're in the same house, but there was so much more I learned after I left,
Mm-hmm.
looking back. So, I mean, there were 9 years and 3/4 where he didn't make fees.
Mm-hmm.
And in that 9 years and 3/4, I was in high school and in college. And my sister was in high school and went to college, and they were paying full tuitions. And I mean, they're fine, but it never came up once
Mm-hmm.
that this was an issue, or the performance wasn't as great as it should have been, or that he wasn't meeting that hurdle is really what was happening. Um, I did hear when he hit that hurdle after when it broke. I remember that. Um, but I think what I really learned from him is I've never seen him have a bad day at
Mm-hmm.
home. So whatever he may have been feeling in the office, it never came home. Not once. And I think that's an incredible lesson for me where, um, the market might be going up, it might be going down, but you have to keep an even temper. I
Yes.
think that's probably the biggest thing I was able to witness firsthand. What I see almost all my colleagues doing who are analysts at other funds or manage their own funds, they emotionally can't control
Yes.
themselves as well. So I think that was probably the best lesson was his even temperament.
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question, what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses, while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on the show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. My guest today is Monsoon Pabrai. She's the managing partner of True Investment Management. She has forged her own distinctive path in value investing by combining lessons from legendary investors like her father, Mohnish Pabrai, Charlie Munger, and Guy Spier, all while developing an investment philosophy focused on high-quality businesses, patient capital allocation, global opportunities, particularly in India. Monsoon, how are you? So nice to see you.
I'm doing well. How are you doing?
I'm doing very well. I'm very excited for this conversation. I got to hear you speak in Omaha a month ago, and our paths crossed in clusters at ValueX. So I was really looking forward to having you on the show and asking you a lot of questions, getting to know you better. I want to start from the beginning. You might know that by now. I ask my guests about their childhood and upbringing. Tell me more. How do you think that time shaped you, and especially your relationship with money and the career path that you chose?
Yeah, I think I had an awesome, very privileged childhood. I grew up in Southern California. I wore flip-flops every day of high school. Um, and I think from age 8 to 10, we went to Disneyland all the time because it was 15 minutes away. Um, it's a fantastic childhood. And money was never, I don't know if money was the forefront of conversations, really. It was entrepreneurship, even more than investing, was always about how to be a good entrepreneur. And Munger and Buffett lessons were definitely embedded in that. But my mom was a serial entrepreneur, is a serial entrepreneur. She has a business she runs now. And even when my dad talked about investments, it was never, we put this amount of money in and then we got this amount out. It was always the thesis, always the moat, how they compound capital, what they do special in their business that sets them apart. So I think one of my favorite examples is if we would go to Chipotle, he would show us, he would have us look up at the ceiling, and you could see that there's no ceiling, it's exposed piping, right?
Yeah.
And he explained to us it's cheaper to keep it that way than to put a ceiling in. And then he's like, look at the design of the whole place. They brought it into the whole shop, right? The metal and the wood against each other with the way the tables were and everything. So he always explained to us why businesses did certain things and how it saved them money, and how they could use it to make more money in other ways. And the assembly line with the cheese and the meats and the guacamole and the chips and how fast the whole operation moved. And I remember he even explained to us that McDonald's was a early investor. So I think it was always entrepreneurship at the front of most of the conversations. And yeah, I mean, I feel privileged to have my parents as my parents. It was an amazing childhood. And they also would take us to India as teenagers pretty often. And we wouldn't just go see our family. We would go into rural India, and really see how an average Indian really lived. So I think it was pretty important to my upbringing.
I'm sure it opened your eyes that the whole world is not like California. There are
Yeah.
people living in different ways. But how wonderful it is that you had those conversations about investing and entrepreneurship at the same time at home. And it almost feels like you put on a certain pair of glasses and you can't see the world in any other way. You
Yeah.
can't walk into another restaurant without thinking, how does this business work, or any other business?
Yeah.
And once you grow to appreciate it, it's like a whole new dimension, isn't it? That you just see it and you can't unsee it.
Yeah. 100%.
It's so cool. I want to take us back a little bit to a moment when your dad and Guy Spier, our mutual friend, got invited to a lunch with Warren Buffett. How old were you at the time? And you were there, weren't you?
12.
You were 12. What do you remember?
I don't remember much. I remember it was at a steakhouse in New York, Smith and Walensky, and I live in New York, so every time I pass it, I step inside and I ask to see our names on the wall, which is kind of cool. The only thing I really remember is that Buffett told my sister and I the most important decision we'll make is who we'll marry. And if we have to edit that now, I think that applies to both men and women. That was a cool, I remember the lunch, right? The lunch was awesome. I sat next to him. I had brought my cherry Coke from like an interview to the lunch table. And I think Buffett thought that was his cherry Coke. So he just started drinking my Coke. I remember that. And he gave us M&Ms with his face on it. And he was engaging with us and with everyone at the table. And he would joke with us that our kids' meal was better than his steak. So he was like a nice grandpa at the table. He was a good guy. And the purpose of that lunch really was for Guy and my dad to say thank you. And I mean, the conversation really wasn't too much about investing. It was a lot more about nonprofits, giving back, how to lead a good life. It was a very nice conversation from what I remember. We do have notes. I've looked at the notes. But I was still pretty young at that age. Yeah.
Buffett is not a usual CEO. I've met
Yeah.
many CEOs in my life, and I'm sure you have.
Yes.
And there's nobody like him.
No, there's nobody like him. Yeah.
And even the meeting itself, and I want to ask you because I know you were there in Omaha when he made the announcement a few weeks ago or a month ago. He had a huge impact on many lives, your dad's, Guy's, mine, yours. But he went about it in a whole different way. Even the meeting itself, I don't know of any other corporate meeting where the management allows for this kind of an open floor, ask anything format, where he really doesn't know what the next question is. And he has such a diplomatic and beautiful way of handling some questions that are harder than the other ones, just for lack of a better way to describe it. You were there in the room this time around. Last 5 minutes of the meeting, he makes an announcement. The room goes quiet. Can you walk us through what you felt, what you thought? You've been there more than once, haven't you?
Yeah, I think we knew something was coming. The meeting was half the length it normally is. And he kind of started, he just said he had something more. He was talking about the time left on the clock, and then he had something really important to say. And he was talking about how grateful he feels that he was able to do what he loved for 60 years. And I think the room knew then what was about to come. It was chilling, and it was partly expected, partly surprising. I think it was really beautiful the way he did it. He told the shareholders first, before the
Yes.
board, before
Yes.
Greg. I mean, he only told two his kids before us, but yeah, I mean, it was chilling. I think it was pretty cool.
A year or two ago, I wrote a piece when I come back from Omaha. I feel like, I go to a lot of meetings. I used to probably more. And at this meeting, I really feel like the shareholder is on the pedestal. It's
Yeah.
not the CEO and the management and the executives. It's us, the shareholders. And I felt exactly what you described when he said, I shared it with my kids, but nobody else. And I'm telling you first, I felt like yet again, he's reminding us.
We come first. Yes.
I'm running this business for you the way I would be running it for my sister and anybody else in my
Yeah.
life. That's important to me. And I think it's such a powerful lesson for a lot of people that are managing other people's money in this profession, or they're taking care of people in other way, in other professions, putting the shareholder, the client, the customer, whoever it is first.
Right.
I thought it was so powerful. I really liked that moment. I don't know if you picked up on it when he said, I'm not going to sell a single share,
Yeah.
zero. And this was the moment when the room erupted,
Yeah.
right? I feel like he knew that we need something to cheer
We
on.
needed reassurance. Yes.
And yet again, it's so unique because a lot of CEOs, the minute they step away, they sell all the shares, they move on to the next thing. He
Yeah.
says, no, I'm staying with you. What a powerful thing. I want to ask you about growing up with your dad in the house and learning more about investing from him and then building your own style. I got to meet your dad for the first time almost 20 years ago. He was holding
Wow.
an investor event in Chicago. It was a small room and he was very kind to me. I was a young kid learning to invest. And I still feel young. I'm 44 now, but at the time I was in my 20s. But he was kind enough to give me all the attention
Good.
after reading his book. But anyways, I'm curious what it was like to observe him invest and then find a way to define your own approach to investing.
I think, I grew up, I mean, we're in the same house, but there was so much more I learned after I left, looking back. So, I mean, there were 9 years and 3/4 where he didn't make fees. And in that 9 years and 3/4, I was in high school and in college. And my sister was in high school and went to college, and they were paying full tuitions. And I mean, they're fine, but it never came up once that this was an issue, or the performance wasn't as great as it should have been, or that he wasn't meeting that hurdle is really what was happening. I did hear when he hit that hurdle after when it broke. I remember that. But I think what I really learned from him is I've never seen him have a bad day at home. So whatever he may have been feeling in the office, it never came home. Not once. And I think that's an incredible lesson for me where, the market might be going up, it might be going down, but you have to keep an even temper. I
Yes.
think that's probably the biggest thing I was able to witness firsthand. What I see almost all my colleagues doing who are analysts at other funds or manage their own funds, they emotionally can't control
Yes.
themselves as well. So I think that was probably the best lesson was his even temperament. And I didn't, I really didn't realize it till we left. And then after I was an analyst, I worked at a startup, and it was COVID, and I moved home for 6 months. And, one of my favorite investments of all time, and it's Guy's and Buffett's, is American Express. And I had been chanting about Express since I was like 19 or 20 years old. And I think it was COVID, maybe sometime in April or May. And my dad walks into my room at 7 in the morning, because in California, the market opens at 6:30. And he said, "Hey, American Express is at a PE of 7." And he just walks out of my room. And I was like, what? That's insane PE. So I go downstairs. He's having his breakfast, and we start talking about it. And he says, "What is that thing you're always saying about American Express?" And there's this thing I read on Value Investor Club in, I don't know, 2013, 2014, some old post where the writer wrote, for every dollar of revenue, 60 cents goes into customer retention, which means Coachella tickets, Hilton points, Emirates points, right? So miles. So I said, "Oh, a dollar of revenue, 60 cents goes into customer acquisition." And he says, "Okay, so what's happening right now?" And I said, "Well, people aren't traveling."
Yeah.
And he said, "Yeah, so what's Mr. Market saying?" And I said, "Well, Mr. Market is saying everything travels has to be sold off." I think Buffett sold all the airlines then.
Yes.
The cruise lines were down. And so Amex as a travel card was sold down. And he said, the one thing I learned in the great financial crisis is the last thing people will, they'll keep paying for is the minimum on their credit card. So even if everyone is laid off, they'll pay the minimum to maintain the card for their expenses, and they'll pay it off later when times are better.
Yeah.
So he said, what happens when, so he's like, people are going to keep their cards open and people can't travel. So what happens to that 60 cents for every dollar? And I said, well, he said, it's a liability that they always pay. And if they don't have to pay the liability, what happens? And I said, oh my God, it's a huge float. It's a float. It's this huge float. He knew the answer. He was just trying to get me there. And I thought that was the most beautiful way to put that together. And he said, what is Amex going to do with the float? I said, well, one, they can probably bully Emirates and Hilton and Coachella into better pricing for future tickets, because no one can buy it right now. So they have an advantage and they have the bulk. They'll probably also put more dollars into their small business lending to get a higher return. And they'll just invest in their business and they'll allocate capital well because they're smart at it. And that's exactly what they did. So there was a time when Amex was a 7.5 PE and Mr. Market was wrong. And we had it correct in our house. And I really think that way of thinking is my favorite example of probably how my upbringing was in the house and the way we mixed mental models in a very clear and obvious way. I think he likes to say you get hit on the head by a 2x4. That's a 2x4, but I think he doesn't understand how well he can get himself there and how hard it probably is for other people. So I'm really grateful for growing up in that house where it comes maybe a little bit easier.
One thing is knowing that this is a good idea. The other thing is acting on it. And I met
So hard.
I met a lot of people that really have the intellectual capacity to process and understand. They might even know the business and the details about it better than most of us, but then still acting on it at a time like this. It's fairly unique and not easy.
Yeah. And, the tariff situation in early April, we saw a lot of companies come at cheap prices and they rebounded really fast.
Yes.
And a lot of what my colleagues will say is, our mentors were portfolio managers or analysts during the great financial crisis, where it took a long time for things to recover. But right now with, Citadel and these market makers, we don't have as much time. You have to be smart and a little quick. And it's hard. I think it's hard because it's very hard to pull the trigger to get the price right.
I took calls from fellow investors in March of 2020. And I have to tell you that I know people that have many more decades of experience than I have, but they broke in March of 2020. They said, I'm not going to wait another decade for my stocks to come back. And they sold at the bottom. They said, I just emotionally cannot take it one more time. And obviously, they regretted it after, and they tried to follow it and chase it when the market was taking off. But it's a whole different situation. I think it's very humbling to know that no matter how much experience you have, no matter how much you've seen, the emotional discipline that your dad showed in your house, not being able to collect fees for almost a decade, it's something we have to cultivate day after day after day,
Yeah.
because it will
It,
be tested.
I think there's no better lesson I could have learned, especially as a long-term investor. I have full appreciation and faith in the process, and I think it's really hard to maintain that, So yeah,
But if you can,
if you can, it's good. And it's, I think it's hard. I think it's really hard to learn. Um, but I think if you understand it, it's easy to commit to. Yeah.
I think you're touching on something really important. So I think for me personally, it would be really hard to hold on to an ETF, an index, for a tough time, because I don't really know what I own. I own everything and nothing and at
Yeah.
the same time. But if I own a collection of businesses, however many you want to own, some people are comfortable holding 4 stocks, some people are comfortable holding 40 stocks, your choice. But if you know what you own, their
It's good.
balance sheets, their business, even the metrics you describe with Amex, and it's no endorsement of any kind, your own research, whoever is listening, but if you know how the business works and what can happen to it, whether it's tariffs or it's COVID or whatever else is coming our way, and I'm pretty sure there will be other things that will surprise
Oh yeah.
us, if you know how the business metrics work, it gives you the comfort that you know what you're holding, you know how bad it can get for the business to continue to operate, and how they can, as you pointed out, take advantage of the situation and continue to hold it for a tough time.
Yeah.
I want to ask you about other influences in your life. You spent quite a bit of time with Guy Spier.
Yes.
I think you met Charlie Munger at some point. I'm curious to hear about that. But tell me about both. And I think you shared some cab rides with Guy Spier at some point in India as well. Tell me about both experiences having those influences in your life.
Yeah. So I think of Guy as an uncle, but he considers me a sibling. So we have a cool friendship, I think. So I met him the night before the Buffett lunch when I was 12, and he took us to Cafe Lalo in New York, which I would say is my favorite cafe, and it's unfortunately closed, but it's in a lot of 90s rom-com movies. So that was nice that he took us around. We've basically hung out in China at the Mao Tai factory, all over India. I mean, multiple cities. We've done a bunch of visits together. I've seen him in his Kloster's home, Zurich home, and his London home. And he comes to New York. We've done Shabbat here. Joined him for a Shabbat dinner in London. So and I see him in Omaha every year, and his kids and his wife are wonderful people. So I think of him as like a relative, really. And like we're like investing family cousins. I don't know. And his investment style is so beautiful. It's just long-term compounders. You don't touch them. I think his largest holding is Berkshire, second largest is Amex. And I think what I really appreciate about it is that you don't need to think too much. It's what you're really paying Guy to do for you is to hold on to it and not sell. And I think a lot of my clients too tell me, they're like, oh, I tried investing on my own and I just couldn't hold. All I had to do was hold, so I'll pay you to hold. You can hold, like it can't be that hard to hold, but it really is.
It
When I
is.
talk to people, it's hard to sit still. It's hard to watch the
Yeah.
wall, paint dry. So I think Guy's really talented at that. There was a meeting. I joined my dad for a week in Turkey, and we walked out of meeting Coca-Cola Isaac in 2022. And I said, that's the most amazing company I've met this week. And we met like 40 companies. And he just said, you're Guy's daughter. You're not my daughter. That's something he would say, like that was whatever. And a year later, I didn't join him on this Turkey trip. He comes back from Turkey to New York, and we're getting dim sum, and he says, I have to tell you about the most amazing company I met. I was like, oh, which one? And he said, Coca-Cola Isaac. I was like, I told you this last year. And you told me I'm not even your child. This is something Guy would pick. So I think um, I think Guy has a talent for recognizing the obvious investments. I think my investment style has got a bit of Guy, got a bit of my dad. Um, it's really got Munger. It's just long-term hold. If I could go into a coma, everything would be fine, is definitely one of our investment questions. So, I mean, I like doing nothing, and I like making money doing nothing and not thinking much. Who doesn't like that?
Yeah.
And I think Munger does that really well. Even though he's such an incredible thinker, he doesn't have much turnover in his investments ever. And I think Guy is really good at that, and Munger is really good at that. And I would say even my dad probably is pretty good at that too. But I think my dad is drawn a little bit more to deep value than Guy and Munger are. Um, but there was some stuff Munger was buying towards the end um, that would look like a older school Buffett bet or something my dad would own. So I think we dance. I think everybody dances between deep value and long-term compounders, and they're really trying to find both. And I think even I have to ask myself that question every time I invest. And when I allocate capital, like how much do I want to just be things that I never touch? And how much do I want to be things that give me an incredible return in maybe a shorter period of time, and then I swap it out for something else, because we are here to make money, right? So there's something to learn from everybody. But I think Munger and Guy are long-term compounders natural long-term compounding investors who just like to let it ride.
I have this idea that a lot of people bought the right thing at the right time at the right price
Yes.
and tell me the story. But there are fewer people that actually held on to it
Yeah.
for long enough.
Holding is really hard. And it goes back into temperament and just, I love that analogy of Buddy on the plane in Seinfeld, just totally content doing nothing.
Yeah.
I think the best skill to long-term investing and holding is to develop hobbies.
Yeah.
So playing golf, playing tennis. I play an online game called Settlers of Catan. And I'm ranked pretty high. I play a lot. And I think it's good for anxiety. I think it's good for depression. I think it's good to just keep your mind active. I think it's good for long-term investing, so you're not fidgeting or looking at your brokerage account too often.
I think you pointed out something fascinating. I noticed that a lot of people that try to invest on their own, they were very successful in one business. They might have sold the business, or it's a business that generates a lot of cash flow and they have excess capital to invest. When they start investing, what they're missing is the activity, the action. The business they used to run, they have to turn the inventory, they have to fill the shelves, they have to move things, they have to change this, change that. And in investing, you do a lot of work understanding the business. The learning never ends. The business has changed. Even Amex is a very different business today than it was, 10 years ago or 50 years ago. But the actual activity, the purchase, you do nothing on that front until you change your mind, or you're proven wrong. You missed something, or the world changed around you and you have to move on. I wrote a piece not long ago about making money in your sleep. And I was in Singapore for a bit and in Thailand, and I was thinking how half of the world sleeps when we are working, and they're working when we're sleeping. It's a 12-hour difference. And that's what inspired the article. And then I actually found research that a lot of stock moves happen after hours. So the only way to capture it effectively is by being a whole long-term shareholder, because you capture those moves. But when people are watching their stocks throughout the day from 9:30 until 4, or in California, it sounds like at 6:30.
6:30 to 1. Yeah.
That's not where the actual action happens.
No.
It's the announcements after hours, earnings releases, management changes, new products, good and bad, that happens. But it happens after hours, and it's when the difference happens. It's really overnight that most of the upside happens. I manage money for families, long-term patient capital. I run stock portfolios for them. A lot of the stocks I look for rhyme with what you're looking for, which are high-quality compounders. Can you walk us through your process? How do you find them? I'm guessing you have some sort of a wish list, and I'm also guessing that you patiently wait until the price sounds right. But walk me through the process. How do you find them? How do you watch them? How do you act on it?
I meet, I think finding them is random. It's never, I think some people run screeners. People do a bunch of different things. For me, it's just, I think I just introduce randomness. So I read the Wall Street Journal every morning. I go through Value Line every couple of weeks, just to see what's new, what's cheap in the US. For India, I basically go once a year to India for a couple of weeks and I meet all my current investments and their competitors. And then I just introduce randomness. Whatever I think sounds interesting or someone's recommended, I'll throw into my schedule. And then I like to sign up for a conference, and I only like to meet companies I don't own. Just so I get 20 random companies that can be thrown into the mix. And it's not really to invest, it's to learn. Um, and then in other countries, like I'm going to Turkey in 2 months, I just tag along with my dad and I look at the companies his team has put together, and it's kind of nice. And just there to observe, but I have Turkish access now, which is really exciting. So I'll do random trips to random countries and just randomly meet companies and keep an open mind. The real work starts when I come back. And if something's piqued my interest, then I start the research process to figure out if I actually want to invest in it or not. And what happens is I usually love it and the price isn't right.
Yeah.
So then we wait. Then we do the waiting. So we wait to buy and then we wait to sell. So I have a list of businesses that I love that are just too expensive to buy right now. And, I'll give you one cool example that it's something I've thought about for years that I haven't bought yet. It's TSMC. So Buffett bought TSMC a couple years ago and sold it pretty quick. And it's an incredible business. It's a long-term compounder. It was at a good price then. And the problem is that, China wants to take Taiwan. And they say it. And the assets TSMC has outside of Taiwan is not enough to make sense to fully invest in TSMC. But we don't know when China will take Taiwan, right? Like we have no idea. We just know that they want to. And so I basically put it in the too hard pile and said, it's an incredible business. It's just the politics is, you don't know what's going to happen tomorrow. You just can't underwrite it. And the more I've thought about it, I think I've mentioned it to other people. They said, oh, what did you do? And I said, I just ended up not buying it because this happened. And as I've talked to more and more people, what I've concluded is if I buy it, I would just position size it smaller.
Right.
Because I do think we can still get an incredible return on it. And when I used to be an analyst at other funds, if we bought a position that was 2 or 3%, once it hit 5%, we would start selling. We would never have a position over 5% or a position over 10% because you don't want to have too much risk, right? So, and I always never liked that because I thought I want to let it run. I want the compounding to happen. You don't want to get in the way of magic, really, frankly, like of a high quality compound. You don't want to restrict it. But with TSMC, I decided, okay, we can borrow something from everybody. We can position size it smaller and we can put a cap. We can put it a 5% cap or a 10% cap and decide not to let it go past that. But I think that's the only company on my list where I've really just been so uncertain for so long on what to do. And I'm a political science student. I love international relations. And I know China wants to take Taiwan. Like, we know that. The neighborhood I grew up in was primarily Taiwanese people. So I'm pretty familiar with it. And I think that's where I concluded. But it's kind of fun. You look at different companies and you think about it. In India, you also position size a little bit smaller because of how volatile the market is. In the US, I position size a little larger because I'm not afraid of fraud as much here, and I want the compounder to just keep running, and we have a free market and a capitalist society, and just incredible innovators and leadership here. So yeah, it's I think idea generation is just random, but what we invest in, it's good price, good time, good company.
You're touching on so many fascinating
Yes.
topics. So I wrote down a few words that I want to go back to. Well, first of all, position sizing. I find it fascinating
Yeah.
because I've seen people do it in so many different ways. And what you point out is just letting your winners run.
Yeah.
And Peter Lynch told us about it. I read his book was the first real investment book I read when I was 20, and it really made a huge impact on me. And I think the reason we're even having this conversation is because of that book.
Yes.
But what always frustrated me in a lot of setups practices is that you bought the right thing at the right time. It doubled, and somehow you have to trim it so it fits the 4% mark, 5% mark, whatever it is. And I don't do that anymore.
Yeah, more trimming. I agree. Don't trim.
It adds in my mind, in my context for my clients, such a huge value because you put in so much effort to find the idea, which we touched on, and to hold on to it and let it double and double again and double again. You might have a limit if you choose at purchase. That's personal, but let it run. And related to that, I completely dropped the idea of price targets. Wall Street is built on the idea of price targets, and I feel like, what do you do with a price target? So once you hit the price you had in mind, it's such a huge satisfaction. Look, I was right. It's a $50 stock. And then what do? You sell? What if it could be $100 stock, $150 stock? I never really knew what the price target means because on one hand, it gives you some sort of confidence that you knew that it will be a $50 stock. But what do you do next? I want to ask you about the three buckets in a way, or silos that I see. One is the big picture. I study political science. I can relate. And I see things that some people don't pay attention
Yeah.
to, and
Yeah.
they excite me and they worry me sometimes. So you have this big picture context. Where does this business operate? And you're touching in this conversation on many different places on earth. And then you do company visits. You actually sit down with people that are running those businesses. But then you mention I come home and I do the in-depth research. Can you walk us through how those three coexist? The big picture where he's visiting companies, and then you sit down at home. What do you read when you get home?
Oh, when I get home. Okay, so let's say I come home from India and I met like a couple waste management companies that were interesting. Then the process starts. So then I go through the last 10 years of financials. I go through their earnings calls, their transcripts, and I look at how management navigated tough times. And I look at how they allocate capital. I look at how they answer questions, and I look how they think about running the business on a long-term horizon. Um, the standard of thinking that I go, if I've identified a business I like, and I've come home to do research, I first ask myself, is this a good business? And I have about 50 questions that come under that. So, is the industry good? Like what is the moat? These kinds of questions. Do they have pricing power? How hard is it to disrupt the business? Like, can they go under? Whatever. Then I look at what's the margin of safety. So I think this is the hardest one. So what's the upside that we can see against how bad can the downside get, right? Like how much money can we lose here if we're wrong, and how much money can we make? And you weigh it against each other. I think that's definitely the hardest question. And you're never really truly correct. You just have an idea. The third thing I think about is how do they allocate capital? So that's when I go through the transcripts and their financials, like, okay, where did they put money? How did it return capital for them? Did they do buybacks? Did they pay out a dividend? Stuff like that. And then the last question, which is really important for emerging markets more than the US, is alignment of interest. So like in India, if they own 70, 80% of the business, if they're not paying themselves a dividend, or paying themselves a salary or paying a dividend, it's probably a fraud. Just frankly, like it just is. Like you just know then they're taking money out of the business to lead their lifestyle, and it's not someone you want to get into business with. So, and alignment of interest in that way is really easy to check even before you meet the company. But sometimes even after you meet them, Um, you get a weird feeling. I don't know how to explain it, so it's a weird feeling you
Oh,
get.
I know exactly what you
Yeah, you
mean.
know exactly what I'm talking about. And yeah, so that's kind of the homework I do when I come home.
Hmm.
If something passes that list, and that list was really developed when I was an analyst at Dalton, and it really helped me formalize my way of thinking.
Hmm.
So I'm grateful for that. But it just makes it a simple framework, easy for me to understand. I have to pass it, at a B minus or A minus before we invest. You're gonna have some that they're not gonna pass every question. And I think something that I'm always worried about is leverage. So
Hmm.
how much leverage has this company taken? And I don't like to invest in companies that are highly levered unless it's financial, and then you still run into tough times. So I like to be careful with that. But that's kind of the homework I do when I come home. And it's the most fun part because it's just me and my computer and my thoughts. And AI has kind of sped that process up a bit.
Hmm.
Not gonna lie, it's
Hmm.
made it really fast, and I think this new young generation of investors is gonna have a serious leg up on the guys who are ahead of me. And last time I was home, I just sat down with my dad and I said, "We need to make AI a part of your daily life." And I think Sam Altman said that people over 50 use it as a Google replacement.
Yeah.
My generation uses it as like a therapist, someone to talk to about life, and college students use it as a full-on operating system. So I've been pushing myself to use it a lot more like an operating system, and really like almost an investment partner. Um, and I think it's pretty smart. You definitely need to always still do your homework. You can't listen to what it's saying. You need to question and be curious and skeptical. But it like NotebookLM can read a 10K faster than me,
No.
and it's incredible.
I have so many thoughts, and it's funny. You're
Sorry,
gonna laugh
I'm
because
a bit of a rambler. Yeah.
before you said the word I wrote down AI question
AI.
mark. I have to ask her, and then you started talking about AI before me asking, which is pretty cool. I have to tell you a story. So when I was a junior analyst in New York, I just arrived. I was 24, very excited, and I was a bit disappointed with the software they were using. And I was just learning what's available, and that's year 2004. It's a long time ago. I mean, to me, yes or no, I mean, a while ago. And I reviewed a couple of options. We brought the new software to use to get financials and analyze. Not going to say who we end up using. But anyways, the reaction from older partners. So here I am 24, and there are partners that are my current age in their 40s, and there are partners that are 80. Imagine. The 80-year-olds came up to me without smiling, and they said they were not happy with me bringing new software. And they told me, what do you think you can do with this that I couldn't do when I was your age with a pencil and paper? And I said, nothing, but I can do it a lot faster.
Yeah.
And AI, to be honest with you, is the second revolution in my work in the last 20 years since the internet and things going online. I haven't seen anything like it. I'm trying to embrace it. I'm talking to a lot of people about it, and I'm using it much more than I ever have. But I feel like we're just scratching the surface. I mean, somebody told me this is the worst AI we will ever have. It will only get
It
better.
is the worst. Yeah. Every day it's the worst. It's just getting better. Yeah.
But it's already very, very powerful. It helps me. There are certain research things that I wouldn't do because it's going to take too much time, right? Or I would do it for one company, but not for five. Now I can throw it in, and it's my quality of questions that allows me to make it happen. That's for sure. But it's almost like a whim. I'm going to double check that for five competitors instead of just two, and I can put it in. Boom,
Yeah.
it's done. I'm like, okay. And incremental value is huge. The speed is huge. Fact checking is even better. And you don't have to rely on what you think you remember the last time you read the annual report. You can go back and find the exact part and how the evolution of that thought happened, how the management even talks about something. Anyways, I think we're just scratching the surface.
Yeah.
And I haven't seen such a massive change in our interaction with information and data. I'm going to caveat here that I don't think everybody does that. I think a lot of money is invested in a passive way.
Yeah.
I believe that a lot of people are not actually reading even annual reports or proxies or anything beyond the headline of a quarterly earnings release. They just look at the estimates, miss or not, and guidance up or not. Nobody actually reads the actual transcript. But for those of us that do, I think it's a
You
huge
do a lot
advantage.
more. Yeah. In a shorter period of time. Yeah.
I think it's a massive leap, and I'm very excited, and I'm even more excited for people that are just getting started because they don't know what it was like.
No, they don't know. Yeah. And as a like a one person shop,
Yeah.
I mean, I'm my own assistant. I'm everything. It helps me get through the tiniest tasks way faster too. Um, I mean, I I had like a if I have like a high volume of emails,
Yeah.
and if I click on something and I exit, the way
Yeah.
I have my to-do list is I keep it unread. But if I accidentally click it, sometimes it goes missing, right? And I don't have someone going in and checking. I just ask ChatGPT, write a script to mark everything unresponded to in the last month to unread. And in 90 seconds, it's done. It doesn't
Hmm.
have a single bug. I can throw it into my Gmail and it works. And then I found like 10 emails that I needed to respond to. And it's just, I don't need an assistant anymore. I can just go do it very quickly myself. And I think what we're going to see is a new wave of entrepreneurs who are running businesses with way less labor force. And what I've noticed with my friends
Hmm.
is they're worried that their jobs are going to be replaced. And I went to Berkeley, so I have a lot of friends in tech,
Uh-huh.
and they can't go to sleep at night because this is what they're thinking about, and they're panicked. And I think the most important thing is that the final touch is the human touch,
Yes.
right? And you have to have strong brain power
Yeah.
and strong humanity to make sure that like it's still you, it's your voice, and it's your work coming through, but you use the tools the same way we use the internet. We're still ourselves. It's AI will AI is incredible. I'm so impressed. It was pretty bad 2 years ago. Like I just kind of waved it off. And last year, I don't think anybody really thought about it. But this year,
It's getting
it's been
better.
strong. Yeah, it's very good. I'm very impressed.
I had Lucas Miller, who teaches at Berkeley, and he talks about productivity. And you might know his name. And not long ago, we had a conversation about AI, what it does and how it changes. Once you have a tool in your life, that tool starts to change your work. Until you have that tool, you don't even think of doing it. I'm gonna share it real quick, but I feel like what you're doing, and I'm a single person in operation these days too. I used to be a part of a team. And I realized that I'm trying to fire myself from different roles within my operations. I want to find a way to automate it or have a tool to. So I'm trying to remove myself from certain processes that have to be done for various reasons. But I don't want to be a part of it because I think my brain belongs somewhere else.
Yeah.
My best value added capacity at spending time with clients and looking for investments, everything else, it has to be done by a script or a tool or an automation, whatever it is. I'll mention one last thing. I think larger firms will have a harder time embracing it. Just from my own experience, I haven't worked at massive companies, but I worked at companies with more than 100 people. To convince more than 3 people in the room to do something across the board the same way,
It's hard.
it's hard.
Very hard.
So
Yes.
if
Yeah.
you're a single person operation, it's so much easier to just try it, test it, move on to the next thing. I want to ask you about India. You've been traveling to India most of your life. You still go there. You're excited about India. I don't want to ask about specific businesses, but you're bullish on the country and on investments over there. Tell us about the biggest risks and misconceptions that foreign investors might have about India.
I think a lot of foreign investors think that corruption is widespread,
Yeah.
and they're partially correct.
Yeah.
Um, there are some incredible businesses that are clean operations that are deeply inspired by Buffett, that take a 300-year view.
Yeah.
Um, and they're not that hard to find. But I do think you have to have the network and the people to talk to really verify that the investments are legitimate.
Mhm.
Um, you don't really face that in the U.S. You've never walked into a meeting in the U.S., met a management company of a certain market size, and thought, oh, this could be a fraud. And I get that feeling a lot in India, but not in every meeting. I think people who, and what's happening now is we saw foreign flows out of India at the end of last year, and we saw incredible flows back into India earlier this year. So I think foreign institutions like investing in India. They like investing probably in the top 100, 200 market cap companies because they like the coverage. They feel like if something is negative, they would be able to find out, or they have teams on the ground in India who can check it out for them. But I think India has like 3 or 4 thousand listed companies, and I would say probably 60, 70% of them are untouchable. Just because they don't have good IR, or they don't. And everything is in English. Nothing's in a native language, so you can read it if you speak English. And they speak English in their meetings too. They just have a bit of an accent, and they maybe will say a couple lines in Hindi colloquially. But if you were to be in the meeting with me, they would speak English the full time. And when they hear me speak, they switch to full English because they can hear my accent and they assume I can't speak any Hindi. But it's an incredible. I mean, you have an incredible story in India. You have a median age of 29. You have it's the largest democracy in the world. The regulators are a little bit socialist. They want it to be an even playing field with all the players, which is a bit frustrating. We don't see that so much in the U.S. as much as we see in India. And you have some pretty incredible entrepreneurs. And there's parts of India where the culture is deeply entrenched in entrepreneurship and in business, and you have multi-generation families who are running the business very well. So the joke where the third generation here ruins the business, the third generation there is doing all right. They've grown up in the business, they're fully into it. They're probably not as great as the first guy, but like the Ambani family, the Mukesh, he's the son of Dhirubhai. What he's done versus his brother, it's incredible. And he's second generation, and we'll see how the third generation does. His daughter Isha Ambani I'm a fan. So we have incredible operators, incredible businesses. I think you have to be careful with fraud. If they're getting government contracts because of their close association with the government, that's okay. If they're taking money out of the business to buy their Lamborghinis, that's not okay. So it's kind of your own comfort with investing that I think is really important.
I manage money for families with multi-generational family fortunes, and I've learned a lot about the practices people have around the globe, around running a business, but also keeping the money around for more than one generation, which is pretty remarkable. I think there are a lot of things working against you. And I find it fascinating to be able to learn from practices from around the globe, not just the US-centric. I spent half of my life in Europe. I was born in Poland, so I feel like Europe can learn a lot from the US about creating wealth, and I think the US could learn a lot from Europe about preserving wealth. And I got to meet a lot of people in Asia and learn from their experience. And there are quite a few families that found a way to succeed, and I think we could learn from them.
Yes. I mean, they protect the nest egg.
Yes.
So I think Buffett had a drawer growing up with cash, and he told his sisters, "You can't touch this drawer." So you'd add to the drawer, but you'd never take from the drawer. And I think it's the same thing that a lot of these wealthy families do is they would live off the dividends, but they would not sell a share. And I think that's really, really important. One of my favorite managers in India, I won't say which business, but he looks at it at a 300-year lens. All his competitors laugh at him because he uses almost no leverage and they use a lot more leverage. But he owns 67% of the business, and the dividend he pays for himself is basically $4 million a year, which is an incredible payment. And that's all he needs to lead a life that he would like for him and his family in Mumbai. And yeah, he drives his Lamborghinis in Italy, and he leads a good life, and he's married to a Bollywood actress. But it's a clean operation with an incredible operator because they have that, protect the nest egg, live off the dividend. which you don't find as much in the US, I think, with the larger cap companies. Here they're professionally run, and the CEOs get, a payday. But in India, the founder is still running the business, or his grandson is running it, or his son, and they haven't sold a share, and it's incredible.
It's the importance of survival and playing an infinite game, a game where you don't have a scenario that would completely derail you. Leverage is one of the ways that you can
Really hurt yourself. Oh yeah.
really hurt yourself. You look like a genius on the way up, but you could part with what you have very quickly on the way down.
Yes.
And the idea of protecting the principal, as you mentioned, living off the dividends, I think it's such a simple yet such a powerful idea when it comes to managing a business or a family fortune, that you pay attention what you're living on. I want to ask you about giving back. You brought up at the beginning, and I know that your dad, your family has been involved helping people. Tell me about this experience, what it's like, and how it's making a difference in your life.
The coolest thing ever. Dakshana started when I was 10. And I started visiting schools and campuses around 13 or 14. It's just, I don't know, it's the most eye-opening experience. I grew up totally privileged. And going to India basically showed me, like, these kids, like, there are photos of me with the students and they look just like me. I just was lucky enough to be born in the US to parents who had immigrated much earlier, who were able to set up a nice life for us. So it's a good reminder of, had the people before me, my parents, my grandparents, not put every last dime into education, I wouldn't lead the life I have right now. So my dad's dad went bankrupt when he was in college, and his uncle paid for him and my uncle's college. And had that guy not done that, my great uncle, I wouldn't be here. There's no way. There's just no way I would have been here. And I stayed with that family, and I've also thanked them. But Dakshana, it's the only thing I told my parents I want from them after they pass. I asked to run it. I don't really want money from them or anything else. I just want to be able to run that because it's a powerful organization. What the lives that have been changed in the short amount of time, it's incredible. And those kids, I mean, I visit the campus every year and I like to talk to the kids. They are the most motivating people I've ever met. They're more motivating than Buffett or Bill Gates or Charlie Munger, because these kids, their parents make $20 to $40 a month. They're only allowed to talk to their parents for 30 minutes once a month. They study till 1, 2 a.m., wake up at 6 a.m., work out in the morning. We call it PT, physical training. And then they're in class 7 days a week, Monday to Sunday. They don't get a single day off. And for most of our kids, they do that for 2 years. For some of our kids, they do it for 1 more year on their second attempt if they didn't pass. And about 60% plus get into IIT, and that school has an acceptance rate of 1.3%. And I always tell them, every time I come here and I go home back to the US, I work harder than I do before because you guys are just so motivating. And I tell them, I'm like, how hard you're working right now, you will never work this hard again in your life. This is it. Like, you just have to keep going right now. And I actually think even for myself, my hardest year of school was 11th grade. You're doing SATs, you're doing school, you're extracurricular, you're captain of whatever team, and you're competing at the state level. Like, you're just a really busy 16-year-old, and that's really where you find your limit. And there's been very few times where I've pushed myself as hard as I pushed myself that full year, and I tell them, this is going to be the hardest you work. It will get easier after this, but you're putting yourself at a good school where the opportunities now start to open. So, I mean, they're the most motivating kids. And every time I visit the campus, I usually try to bring someone with me, just because it's fun. It's fun for them to meet more people from the outside world, to get like a different perspective. And I think for the people who grew up in privilege, it's important for them to see. The majority of the world actually lives like the Dakshana students, not like us. With the population that we have in the US and the population around the world, India's 1.4 billion, the majority of Indians live like this. So I think it's a good reminder that we are absolutely blessed and privileged, and whether your net worth is a couple 100,000 or a couple billion, extremely privileged. Yeah.
Getting into that right school at the right time, it's a life-changing experience
Yeah.
for those kids.
Timing is everything. Yeah.
And they have the potential, right? They have the skill. You're
They're
just
so smart. They're just so smart. Yeah.
you're allowing them to tap into that and realize it. And sometimes, I mean, it's the pair of shoes or the bus ticket to go and show up at the exam that they don't even have the money for that.
Yeah.
They could pass, but they can't even get there.
Yeah.
And I've heard stories from people like that from around the globe where somebody gave them the money and they could show up somewhere for that one conversation that changed their life. I have one or two more questions before I let you fly away. I'm curious about your advice for younger investors. We touched on it, and especially women entering the industry. We don't
Yeah.
have as many women as I wish we had, and I always invite women on this show. I want to hear your perspective. We need a lot more women in this profession, I feel like.
Yes.
What do we do? What's your advice? How do we go about it? I think just the fact that women get to see other women in this profession invites them to join the conversation. But I'm curious about your thoughts.
No, you're right. That's the strongest, is seeing people that look like you.
Yeah.
There's nothing more motivating than representation. So for anyone that is a female investor, it's important to be, I think, public and, go to schools and talk to little girls. And I think for any male-dominated industry, for any women that are in those fields, it's important to be present and visible. And I think it's easy for women to just, go to work, shy away when they come home. And I think it's harder to be more public. So I think that's the first step. The second is you need good girl dads. And I think you have a lot of men who love investing, a lot of them who do it on their free time, who have other professions. And I would hope that they're teaching their daughters the same things they're teaching their sons. I think that's another really important one. I was raised by a girl dad. It's a common American term for raising an independent young woman. And I think part of it is the same way we let our sons walk out of the house and fail in the world. I think we're less inclined to let our daughters do that, and I think we have to let them. You have to let your kids fail to learn, and I think parenting is a big part of that too. But I think the biggest thing is representation. That women need to see more women in their field. That's it. Yeah.
I love the sound of that. One of the first, maybe the first essay that I wrote that I made public was actually about role of women in preserving family fortunes throughout history. And I told stories, I don't remember them by heart anymore, but so many times it was women that stepped in and helped in the 1600s, 1700s, all the way until today. The family success, even took over businesses and pretended it's the son that's running it, but it was the mother that was running it. Fascinating stories, and how women played a huge role, and it's wonderful to see more women joining the profession and managing money, because it's such a fun thing to do, and I don't think it's just men that should be doing it. I think we're having too much fun doing it. I think everybody should be doing it.
It's a lot of fun.
It is a lot of fun. I want to ask you a big picture question about your definition of success, however way you want to take it, personal, financial, career. How do you think about success?
It's a big question. For me, I think success is, well, there's a couple of things that I think about. One, I think beating my dad would be awesome, but it's not really the goal. It just would be cool. And I think even for him, that would be exciting for him to see me come out and beat him a couple of years on returns or something like that. I think success really is leading a happy life. So I wake up every day so happy, so blessed. I get to look at the stock market. I get to study businesses. I get to travel wherever I want to study companies I want. And I think being able to be happy and having the freedom to do what you want is success. But because I'm still young and I'm working towards a goal, I think success would be for me, would be for Drew to be, multi-billion-dollar fund and having incredible LPs that I love working with, and just, eventually being a mom and a wife, um, and like being a partner, and just leading a good, happy life. And I think, I do look forward to motherhood. Part of the reason I started the fund so young is that I didn't want to have a 2-year-old at home when I was starting a fund. I wanted the fund to be a bit developed before that happened. And I think it's also probably a reason why we don't see a lot of women in the field is that the biological clock and the career clock are in direct conflict. But I think being able to be a mom, a fund manager, and have a happy marriage would be very successful for me. And I already have an incredible support system of women and men that I've grown up with or gone to college with or I've met as an investor who are just there in my corner rooting for me and always willing to give advice. So I feel so blessed every day.
I love it. I love the sound of it. Monsoon, this was such a wonderful conversation. I really appreciate you joining me. I learned so much, and I'm very inspired by your story, and I hope many people listening at different points of their career or investment interests will learn from you.
I hope the ladies especially listen.
Especially the ladies are listening.
We need more women. I need more friends to talk to who are women and just get it. So I do hope that we have more women in the field. And, thank you for having me.
What a pleasure.
It's always a pleasure. Yeah.
Thank you.
Thank you.
You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.